Purpose-led, performance-driven and future-ready. That is the mantra of the Mahindra Group. And under the Group CEO, Anish Shah, the Group has done very well. It's seeing significant momentum across all of its businesses over the past 5 years. Consolidated revenue has doubled, while net profit has grown 10x, making M&M stock one of the best-performing stocks in the Nifty 50, with market cap up 13x from the lows of 2020. The Group, in fact, added nearly 1 lakh crore rupees in market value in 2025 alone. The company's growth gems have seen a 7x growth in value in the last 5 years, even as its core businesses fire on all cylinders. So what is the growth plan for the future? Joining us today is in the entire top team of the Mahindra Group, starting with the captain, Dr. Anish Shah. Thanks very much for joining us here. Let me introduce all the others to you as well. Amarjyoti Barua, the CFO at the Mahindra Group, Raul Rebello, Mahindra Finance, Vijay Nakra, the farm sector at Mahindra, Suman Mishra, Mahindra Last Mile Mobility, Amit Sinha at Mahindra Lifespaces, Avinash Rao at Mahindra Susten, the new addition to the team, so to speak, Rajesh Jajurikar, of course, needs no introduction here on CNBC TV18, Abanti Sankar Narayanan, Mohit Joshi at Tech Mahindra, Binod Sahai at Aerospace and Commercial Vehicles, Asha Kharga, the Chief Brand Officer at the Mahindra Group, Manoj Bhatt, who's created headlines this morning, so we'll come to you on Mahindra Holidays, and Nalin Kant Golkunta at the Automotive Division. Gentlemen and ladies, thank you very, very much for joining us. Anish, as I was saying, this is the playing 14, so to speak. If I were to start with a cricketing analogy, you and I have spoken very recently. You're continue to be fairly confident, not just about the growth outlook for the group, but also for the Indian economy in general. Given that, what are the headline numbers that you've asked these people to chase from here on?
So, Shereen, it's great being here with you. And I will start with saying that this is an incredible team. And the performance that we've driven is essentially all thanks to their efforts and the efforts of all our associates. We have been able to deliver some fairly incredible numbers, but the aspirations we have are even greater. And as we look at aspirations across our businesses, I will start with the headlines from today for holidays, being the #1 leisure hospitality player in India. We've been the #1 vacation ownership player in India, but that's obviously a sub-segment of the leisure market overall. And Manoj has some fairly aggressive plans for growth for this business as he's transforming the business, not just in terms of getting into a new area of Mahindra Signature Resorts, but also taking our current membership base and creating much greater value for them. As we look at our auto and farm businesses, they've continued to grow extremely well. As we talked today at our Investor Day about key metrics for each business through the decade. And auto and farm have revenue growth of 8x and 3x respectively. That translates to a higher profit growth and hopefully a higher market cap growth that comes with it as well. If we look across our businesses, Mahindra Finance has promised a 5x growth in AUM this decade. And has...
he's smiling very sheepishly as you say that.
He's achieved a lot in the last 2 years already, because we've got the difficult part behind us of getting to a better asset quality, of getting to a much stronger customer experience with technology, with data, and now it's a pivot to growth for Mahindra Finance. So in some ways, a lot of the hard work has been done, and it hopefully should be an easier path going forward. Tech Mahindra on a good track has promised a clear path to margins and more coming after that. And as we look across our businesses, Susten has won a lot of significant deals already, is on track to grow 5x this decade. Lifespaces, Amit has promised a plan of 14x growth this decade in pre-sales, has achieved more than half of it already. And as he has been saying for some time now, that's a low target, I need to increase that target. That's him saying it, not me. Suman has done a fantastic job in electric three-wheelers. We are the largest in electric three-wheelers by a good margin now. And the business has grown, again, fairly dramatically. If you look at electric three-wheelers alone, it's 65x growth, yes, of a small base. But electric is now more than 30% of the entire three-wheeler market, and soon to be 50% as well. So we've got a set of very, very strong leaders. Avanti and Asha have been focusing a lot on purpose. As you said, we are purpose-led. We start with purpose. We've got Vinod, have sort of kept him from a business standpoint last, but our Aerostructures business is, I would say, among the most promising businesses we have. And Vinod will talk about why, from a quality standpoint, he really feels that we stand out versus others, not by our perspective, by perspective of our customers who are global OEMs. Aerostructures has promised a 12x growth in revenue this decade. But if we just look at the order book, and one metric I will say is from Airbus alone, for many years prior to last year, we'd gotten orders of 150 million. Last year alone was 1.13 billion in orders. That's a reflection of what the business has done from a quality standpoint. And our helps keep everything together in terms of making sure the discipline's maintained across the business.
Well, you know, thank you for very comprehensively setting that up. And I think it also gives people a very clear indication that the Mahindra Group is much more than its auto business, which is traditionally how it has been perceived, or at least in large measures continue to be perceived that way. And in fact, just to bolster that point with some data, because I know that this is something that we've spoken about in the past, the auto contribution, both in terms of cash generation as well as to profitability, has come down considerably, given the fact that you've seen your other businesses grow quite significantly as well. Auto now, what, in terms of profit, about 25%, cash generated about 25% as well. Services much higher. The farm sector division also much higher, about what, 35% today. So the Mahindra Group has outgrown its auto business?
No, auto continues to be a mainstay for us and our most exciting business, as we always see in all our forums. But other businesses have grown rapidly, and farm continues to be a huge deliverer of both profit as well as cash. I will highlight our growth gems. We've been talking about that for some time. When we started the journey on growth gems, collectively they were worth 8,000 crores in March 2020. Today, they're worth 56,000 crores, which is a 7x growth in a little more than 5 years. Mahindra's share in them, because some of them are listed, is 48,000 crores. And the value of our growth gems to Mahindra today is higher than the value of Tech Mahindra or Mahindra Finance to the M&M shareholder. And that's where you see the real value creation. And what we did talk about at our Investor Day is much of that value is not even captured because analysts don't give too much value to unlisted entities. And that's something that you will see in a value unlock going forward.
Well, I'll come to the value unlock in just a second. But since you brought up Mahindra Holidays as being the big headline maker this morning, let me go to Manoj. And Manoj, congratulations on Signature Resorts and the move and the foray into leisure hospitality. What gives you the right to win in that space, which is fairly competitive, and you already have large incumbents? What will be the key differentiator for you?
Thank you, Shereen. So as we looked at the market, clearly the first part I would talk about is what we have built over the last 27, 28 years is this whole association with family and creating, almost defining family holidays in India. And as we looked at the broader space, we felt that there's a wide space there where nobody is focusing on in creating premium family holidays, and that's one of the space we want to occupy. And that actually combines some of the strengths we have historically. Secondly, of course, we are a very large chain. Today, we are number 3 in leisure hospitality by rooms. And so clearly, we have the expertise to actually scale up and run at scale. So that's the second point. And lastly, I do feel that experience is going to be the new currency. And if you look at experiential holidays, I think in a survey, 80% said that they would want an experiential holiday rather than a normal holiday. And as we think about that, if you look at what we do today, experience is embedded in what we do today also. So I think that's the third leverage which we want to bring into this business. And clearly, this is a positioning which is different from whatever everybody else is positioning as. And that's what I think will help us win.
And 1,000 crore rupee capex plan as far as Signature Resorts is concerned. And I just want to get some more numbers from you. So about 5,742 keys across your properties today. You're targeting, what, about 10,000 keys by 2030?
I think when I add both the brands, which is Club M and Mahindra Signature Resorts, we are targeting 12,000 keys.
Okay.
So it's a doubling of inventory from here. The split is 10,000 in the Club Mahindra brand and 2,000 in the new brand. And in terms of the capex, I think the capex is for Mahindra Signature Resorts. And the way we are thinking about it is the first few resorts probably we will invest, but as the brand develops, I think there are so many capital light models available today that we should be able to scale up with relatively less use of capital as we go forward.
And any plans on M&A in this space as well?
I think everything is open because I think as we scale up, I think whether we build, whether we buy, whether we lease, or whether we do management contracts, all avenues are open. So something we'll keep looking at.
Okay, something you'll keep looking at. I'll come back to you with more on just that. Rahul, let me come to you now as far as Mahindra Finance is concerned, because the articulation was very clear that this was a business that required turning around. Where do you feel you stand today in terms of that turnaround plan? AUM has grown about 13% year on year. Profitability, though, still flat at about 2% year on year. So take me through where you find yourself today, how comfortable you are, and what the growth plan and the ambition is.
Thank you, Shereen, and great to be here. We've kind of reflected on the last, actually more than a decade, because we've had very specifically 3 eras. And the first era after listing was a high growth era. We went through some challenges in the COVID and the demon period. But what's given us a lot of confidence is the last 3 years, because in these 3 years, our asset quality has remained quite pristine. Mm-hmm. We have kept GNPAs under 4%. And more importantly, a lot of the underwriting that we're doing now is giving our early book a level of stability that we will see will be good in across cycles. I just want to correct some of the figures on profitability. We had a pretty good year. In fact, in end of Q2, we grew above 45% in terms of profitability. Our loan book growth, you're right, has been a bit flattish. And flattish, 14% is not flattish, but it's lower than the peer set. But what gives us a lot of confidence in just drawing from what Anish put out as a target for Mahindra Finance, 5x in a decade. Just to give you context, we were about 60,000 crores at the end of FY20. That 5x would mean 3 lakh crores.
Yeah.
I would have felt extremely constrained if the playbook was just the auto and farm lending. What we have done is now we've expanded the lending book to 2 other big categories. So we are actively going to chase the mortgage opportunity and the SME opportunity. These 3 together to get to a 3 lakh crores is a CAGR of about 20%. So we feel much better equipped today that we have widened our participation. And the headroom for growth in these 2 segments, auto is still a big player. But the headroom for growth in these 2 categories is extremely formidable, and it's all about execution now.
Well, speaking of execution as well as the context of technology, and we're seeing that implemented across the sector now, what are the forays that you've made there, and how comfortable you feel in being able to deal with some of the execution challenges, especially as you attempt to scale?
Yeah, so our business model, Shereen, was because we were very, very decentralized. We depended a lot on last mile judgment. For a player who's now 1,30,000 crores, in close to 95% of the PIN codes in the country, we had to create a very decent centralized engine to understand how each of our branches was operating. So in the last 3 years, I'm very, very comfortable now that we use some of the best in category underwriting tools. We have a loan origination system, which is one of Salesforce's best system, which is used in the country today. And of course, TechM also powers us in a lot of our tech and digital. Mohit called out only his $20 billion club. We are slightly under that. But we use a lot of TechM's acceleration for our digital journeys. But Shereen, more importantly, because our customers range from progressive farmers to small entrepreneurs, we are not force-fitting digital. We are accelerating their digital maturity and kind of getting them up to speed, while also accelerating a lot of our assisted models, because 25,000 employees, they actually bring in a lot of new to credit customers, and using technology there as an enabler rather than getting somebody, intimidated by technology. That's the kind of deft walk that we do.
As and when, if at all, at any point in time, the regulations were to allow it, a banking aspiration, does that continue to be on the table? Is that something that you would like if it were to be a possibility?
I will smoothly pass that question on to Anish, our largest shareholder.
If at all, the regulatory environment were to change to make that possible?
If that adds value for our shareholders, yes.
Okay, if that adds value, and we can't preempt what the regulator may or may not do at this point in time. There doesn't seem to be any indication of that. But Mohit, let's talk about what's happening as far as Tech Mahindra is concerned, because that was part of the other turnaround story that Anish had laid out. How comfortable do you feel today at Tech Mahindra with the way things are turning around, and more importantly, in the context of AI and what AI is being able to do, how much it's going to disrupt? What are you seeing on the ground?
Sure. So look, I think we've had a very good start to our journey, right? We announced our plans on the 25th of April, 2024. So it's now been 6 quarters in a 12-quarter transformation journey. And we'd announced our plans in terms of what we do for revenue. So we said we'd focus on our top customers, and our top customers have grown faster than the rest of the organization. We said we'd focus on large deals that made sense. We had a 57% increase in large deal sort of volume over the past 12 months. We'd said at the end of FY27, we'd be higher than our peer group average. And we were at the absolute bottom of the peer group when we started. We have climbed up from being at the bottom to now being middle of the pack, right? And so that journey is continuing. We spoke about a plan for margins and productivity. And when we made that plan for 15%, when we said we'd do 15, we were at 7.5 in terms of exit. We have now had 6 quarters of expansion from a margin perspective. We'd said we'd build a plan for the organization for the future. I think we've built a remarkable team from a ratings perspective, apart from the investor ratings, which just in our last earnings calls, we got 3 rating upgrades. But if I look at the industry analyst ratings, we've gone up from being in the top 2 quadrants in 60% to now being in the top 2 quadrants in 90%. And because you spoke about AI, the most important rating in that regard is from Gartner. And Gartner has rated us as a leader for AI and Gen AI. But in terms of the future vision for AI, we're number 1 globally, right? Ahead of all of our Indian peers, our American peers, our European peers. So I do feel that we've made good progress over...
When you say you're number 1 globally, what do you mean exactly?
So they have 2 axes to measure performance, right? One of the axes is, one is current functionality, where we're in the leaders quadrant. But the second quadrant is future vision for AI. What can AI accomplish for enterprise clients? And there we're number 1 globally. So I feel that, in 6 quarters, it's a very good momentum. We feel very confident, and we're completely committed to our F27 goals. And then beyond that, we'll sketch out vision for the next 3 years.
Yeah, so give us a glimpse of what the vision for the next 3 years could potentially look like.
I left my crystal ball at home, unfortunately.
You don't need a crystal ball. I'm sure you've got a vision board that sets out those numbers for you. But Mohit,
I'm not going to. So look, I think the thing is, right, that I don't want to start manifesting my FY30 vision over here. But I do feel that, look, the first part of the journey has been about becoming world-class, right? Really a catch-up with the peers in terms of growth, in terms of margins, in terms of deep capability, while building on the strengths of the company. FY30 is going to be about becoming world-beating, right? How do we figure out what are the things that we do exceptionally well, and how does that start to show up in our financial results?
Okay, I'll come back and push you a little harder on some of those issues in just a second. But Vinod, to pick up where Anish left off, take us through, especially on the aerospace side, because that is the big opportunity that Anish was talking about as well. And also in the context of the larger plan for the government with the indigenization process, what that means for the business going forward.
So Shereen, this is a business we started around 10 years back, and it's a very difficult business to get into it because the safety standard in making an aircraft is the top notch, and there is no compromise at all. And we have built the business in a manner that in 10 years we have earned the reputation in terms of our quality delivery and business excellence performance, where we are already rated amongst the best in the world. And we keep saying that we are punching far above our weight in terms of our reputation, and the business has to follow now. And it is indeed following. So the amount of business we won in the first 10 years of our existence 6 times of that we have already won in the last 15 to 17 months. And God has been kind with our reputation. We have a huge pipeline we are working on. And Make in India is a huge support. So while the first assembly line of C295 has already come in India and a helicopter assembly line is going to come, what's more important is that we have got the contract for being the sole supplier for the entire fuselage for the fastest selling helicopter of Airbus. And we will be supplying not just for the Indian assembly line, we will be supplying that fuselage for all the global assembly line of Airbus. And that's the faith Airbus has put on us, that if we fail, none of their assembly line can work. And hence, that's the reputation with which we are building the business. As we speak, we are already expanding capacity in our current factory. And we are running out of space over there. Yesterday, I was with one of the state ministers requesting for land for setting up our new modern integrated large aerostructure factory, where not only we'll be there, we also will like to bring a couple of our co-vendors. Together we can start doing much bigger packages in India compared to the journey with which we started 10 years back. As I said, when we started, we were making parts which could fit in our palms. And today already we are making the assemblies, which are 5 meters in length and which actually comprise of thousands of such parts which we make, we assemble, we machine, and then we supply the full assembly. So that's a very promising business, and globally the outlook of the industry is very, very bright for next couple of decades.
You know, running out of capacity is a good problem to have, and that's certainly something the finance minister would be very happy to hear, because she's been urging industry to set up fresh capacity and kick off private sector participation in the growth story. So leave us with the headline numbers there in terms of capex and capacity expansion.
So we are looking at 12x growth in revenue. The board has already approved close to 1,000 crores of capacity enhancement capex, which we are going to use not only to increase capacity for the current factory to cater to the new orders which we have won, but part of that will also be used for setting up the base level factory for the new one. And of course, the investment will keep adding in that larger facility as we get more and more business.
The possibility of more joint ventures, etc., because again, this is a space that a lot of people are looking at Indian suppliers as becoming tier 1 suppliers for their global supply chain. Is that likely to also sort of be possibilities that you're considering at this point in time?
So as Manoj said, we are open to all ideas.
All options.
and as I said, there is a possibility of doing some packages together. Some of the capabilities we have very strong on metal side of Aerostructures. We don't have composite capability right now with us. But if someone comes and together we are able to do a package which involves both Aerostructure on metal side as well as composite sides, and together we can supply that part to a large OEM, we would be certainly open.
Certainly open. Amar, you know, lots of people here are deploying a lot of money to enhance production. You know, as far as the capital allocation is concerned, given the ambition and the aspiration that the group has, you're putting the guardrails in place to ensure that everyone works as per order. So take me through how you're looking at capital allocation at this point in time.
Sure. Before I talk about the financial deployment, though, I do want to emphasize that, you know, this is always seen. It takes a lot of effort to create value. It takes one bad headline to destroy value. And that's first and foremost on my mind. Right? Whenever we are looking at what can the group do, we are also looking at what are the pitfalls that can come in the way and making sure we have guardrails. So while Anish has set a lot of strong processes in place for capital allocation. A lot of what we are trying to emphasize right now on is, as we go on this 15x, 20x growth, we don't fall into some of those pitfalls, right? So that's a big part. As far as capital allocation is concerned, the key is there is a business case for everything. And one of the things we do now very well is track how we are doing against the business case. And that doesn't mean that you can't deviate. It only means you use the deviation to learn and then come back on track. Or if you have to pivot, you pivot. So that's the big discipline we have brought in. As you know, the group operates with a structure of boards in all of its subsidiaries. The boards have a corporate nominee on them, and we use the nominees to drive a lot of that discipline, especially around the capital allocation. And every one of these leaders knows that there is there's a strong process for asking. Like Vinod worked really hard to get his 1,000 crores, and so is the case for everybody else, because it's a matter of choices, and you must have a very strong business case to be able to realize that choice.
So who has made the strongest pitch to you at this point in time?
Actually, all of these leaders who are here are because they've, I think, made very compelling business cases for whatever they've asked for. I mean, the Signature Resort wasn't an easy sell. It's a big change from what was comfort zone for us, right? And to move away from comfort zone and go into 92% of the market that is underpenetrated, in our view, and is going to grow faster than the 8%, is something that requires a lot. So everyone, I mean, the farm business you saw has been generating a ton of cash, but the farm business also needs to grow internationally. So they've been working very hard to create a strong business case for where to go, how to approach it, what have we learned from some of the missteps in the past, and using that to do it differently this time around. So each of these leaders, I think, has done a remarkable
And I'll come to Vijay on the international expansion plans as far as the farm sector is concerned. But the man that we talk to most often after Anish is Rajesh Jejurikar. And he's, Rajesh, as I pointed out, you've been on the channel virtually taking us through what is happening as far as the automotive business is concerned. And we had you on post the GST cuts. And the expectation was that the demand, pent-up demand, would continue to be sustained even after those GST cuts and the festive season was over. What do you now see on that front at this point in time?
Shereen, thanks. And as Anish has said earlier, and we have to, that GST revision has really been a landmark decision by the government, and it should propel the overall economy on a very high growth trajectory. It will be seen differently in different sectors, but I believe the sectors which will see it most tangibly and are seeing it most tangibly are ones where there are commercial operators at play, and where people are using either vehicles or tractors for commercial benefit. Example, tractors or the LCVs in our portfolio. There, a 10% reduction in selling price has a tangible impact on total cost of ownership. And a lot of that, combined with interest rates coming down, has significantly improved the value, to use your term or Amar's term, of business case for the operator or the tractor owner. So that's where we see the most immediate and tangible benefit. But the benefit continues even in SUVs. So we've seen a big upswing through the festival period.
Yeah.
The post-festival drop that is normally visible is not anywhere near what it used to be, which one can attribute primarily to the fact that there is momentum coming out of GST. So overall, we think GST is going to be a game changer. You saw that today we've announced, and Vijay will probably talk a little bit more about it, the long-term 5-year industry forecast for tractors, we moved from 7% to 9%. And one big contributor for that is GST, because the affordability of the tractor goes up, which when compared with cost of labor, starts making it a more viable proposition. So we do see a very strong growth momentum that will sustain in all the vehicles, including passenger vehicles, tractors, and commercial vehicles.
You're right in pointing out that GST has been a structural change as far as the auto sector is concerned. But, Rajesh, if I were to ask you specifically as far as the ICE portfolio is concerned, 4,500 cars at this point in time, you have a capacity of 8,500 cars. What's the expectation now in terms of run rate?
We have 2 new cars coming up, which we'll announce next week. Till now, everyone was expecting one, but Nal just a few hours back said that there's something else that's going to happen on 26th evening as well. So it is actually 2 launches that we're doing on the 26th, 27th. We have believed, Shereen, that the EV portfolio has a lot of learning, and we have to calibrate the organization learning as you're building a category. And the last 6 months has been, and which is the reason why, even though we were ready with some of the other products, we decided to phase it out. So that we build learning in the channel, the back end of the organization, quality, software, all of that. And I think we are at a stage where we're ready to ramp up.
And hopefully Jan onwards, we should see the numbers go up. And that's how we had planned it, which is why when we announced the first two, we had said the initial capacity we are operationalizing is about 4,000 to 5,000 a month.
You know, you said that you intend to do 2 launches now. That's on the EV side. What about ICE? Will ICE largely continue to be a refresh story, or is there likely to be anything fresh on the ICE side as well?
So 15th August, if you'll remember, we revealed the new platform that we're doing, which is a new IQ platform. It's a multi-energy platform, so it will have ICE. The first lot of products which will come in 2027 are ICE products, and there's some really exciting products which we've shown media on 15th August, and today, we're showing all the 4 concepts to the investor group as well. So if you have a little bit of time, we'll walk you around those.
Would love that. So you're, of course, in the market buying yourself a 7-seater. I believe you've already invested in a new car for yourself, Rajesh. So now the business looking good?
Business is looking good. Like Rajesh said, post-GST, we've had strong demand, and that's sustained through November as well. And we see that both on the LCV side and the replacement cycle has kicked in post-GST as well. So that's great news for the overall industry. And for the SUV side, like I said, we're in the mid to high teens growth that we're projected for the year, and we're confident we'll be able to achieve that as well.
Well, Vijay, let's talk about what's happening on the farm sector side as well as, and Rajesh's point and Anish's point and Amar's point about you looking at the international space and the international markets also.
Yeah, so, Shereen, let me first begin by saying that the strong domestic position that we have in the tractor business is what helps us have large aspirations for international growth. And like Rajesh mentioned, with some structural changes with GST coming down, and also what we've seen in terms of horticulture and cash crop, the sowing intensity of that increasing, and the profitability for the farmers going up by about 5 to 7% in our regression model going forward, where both these factors account for almost 30% weightage in the regression. That analysis allows us to now revise that estimate of last year of 7% CAGR growth between 25 and 30 to now 9%. That obviously means there is a stronger headroom for growth in domestic. Mm-hmm. And that, in a sense, also helps us fuel our aspirations for international growth. As far as international growth is concerned, I'll talk about 3 key markets where we have significant presence today outside of India, and they are in the top 5 markets globally by volume. If you look at North America, it's about a 200,000 market. And today, with the launch of our global tractor platform, at the end of Q2, we were at a market share there of 10.4% in the less than 20 horsepower segment. When we talk about Brazil as a second market, it's a large market, 40,000 tractors. We also have an 8% market share in that market. And we've recently, very recently, in less than 12 months back, entered ASEAN through Thailand, mm-hmm. where we are taking a more cautious approach, as Amar was talking about some of our learnings from our presence globally, where we've decided to go slower in terms of looking at the provinces where we will enter, expanding our channel over time, making the right products available in the market, and then making sure we build success. So I think based on some of our learnings from the past, what we have chosen is that we will take select markets. We will ensure that we go deeper into it. We will ensure that all the enablers that drive growth and success in those markets are the ones we will put in place, build success in these 3-4 markets, and then talk about further expansion into other markets globally. So,
by 2030, what could the international contribution be as far as the farm sector is concerned?
Well, like Mohit said, I've left my crystal ball back home too. So I don't think I want to give a guidance on that. But I think while domestic is our very strong pillar, I would say our play internationally and using technology as a lever to play internationally. One of the aspirations, or the aspiration we've set for the farm business, is to democratize technology. as part of the aspiration of the business. And we would definitely want to be leaders in that area. We will look at, and like I said, it's an aspiration, but we will look at a combination of telematics, drones, satellite connectivity, AI, data analysis, so that we are able to add value to the farmer. The objective of technology is not to do it just for the sake of it, but make sure that we increase output, reduce cost, and optimize equipment utilization in the
Would
farms.
EV make sense as far as the farm business is concerned? Economically, does it make sense?
Well,
At least on the smaller side?
Well, that's exactly the point, Shereen. I think our view is that let's understand that tractors and farm machinery are prime movers. So a tractor typically attaches something to it to do a job. And if we look at the typical agricultural application, the implements usage are all heavyweight implements. And the heavier the tractor needs to be to work those implements, you draw more power, you get lower range. So our view is the smaller tractors, which is typically the 20-25 horsepower tractors, just like we've seen in commercial vehicles where three-wheelers had higher adoption. We believe it will first start in the tractor world in the lower horsepower tractors. That's exactly what we are working on. But from an economics point of view, I think we still need to wait and see how that will play out over the next couple of years.
Rajesh, if I can come back to you on the technology and regulation issue, one of the impending changes as far as the sector is concerned, the new CAFE norms. Of course, industry has been asking for a deferral, or at least a postponement as far as the norms are concerned. But how ready and prepared do you believe Mahindra finds itself if those norms were to come in as per schedule?
Yeah, I think, Shereen, here the first question is what are going to be those norms? And right now that's at a draft stage. So, there are multiple scenarios that can play out based on what finally comes through as the draft norms. Our role as an OEM, of course, is to advocate for what we believe is the right norm. And we do believe that EVs is a very cornerstone on what the, choice of fuel journey should be for the country. So there is a lot of advocacy that we are doing, but that's also the policy statement of the government. So what we have to do as an OEM is really prepare ourselves for multiple scenarios, and that's what we're doing. And we believe based on the SIAM, the primary view of the SIAM is to stay with the December 2024 draft that was done. There is a different version of a draft now, and the government is in the process of reconciling all the feedback on that. And we would prepare ourselves to meet the CAFE norms based on whatever scenario plays out.
Amit, as far as Lifespaces is concerned, the aspiration of being pan-India, and more importantly, what's the outlook now as far as the business is concerned?
Well, Shereen, this is a very local business. The national market share doesn't matter.
But the national players are moving into your markets.
Yes. And we'll welcome them with open hands and very good competitive pressure. But I think what we want to do is we want to be the top 5 player in our core markets. This is a very local market where you have to play the market share game at the city level. So Mumbai, Pune, Bangalore. So we have consolidated our presence from 6-7 markets that we are operating in the past. So these 3 markets. These markets are really large. Like Mumbai is 3 lakh crore, huge market. Our market share is 0.5%. The largest player's market share is 6%. So that, we need to play that game really, really smartly. The shift is happening towards quality players. So the unorganized sector players, unbranded players carry 70% market share, right? So we have a significant opportunity to actually take share away from unbranded guys, which have lost the ability to attract customers. Their funding costs are high. So we have significant room for capturing market share in each of these cities. So we're going to focus only on 3 cities and capture the fair market share that our brand deserves. So that's our plan is.
What do you see as opportunities opening up even within these 3 cities is concerned? Redevelopment, of course, is a big aspect of one of the potential opportunities for the sector.
Yeah, absolutely. And as you know, let's take Mumbai as an example. The infrastructure upgrade that we have seen is a once in a lifetime and actually lifeline for Mumbai real estate, Mumbai job creation. Many of the companies that never thought they can have employment in Mumbai, they're coming back to my IT companies, tech companies, GCCs, etc. this infrastructure unlock is significant. Now, combined with that, when this is happening, but most of Mumbai does not have vacant land parcels, right? So society redevelopment or joint developments or other forms of redevelopment becomes a key part. Our aspiration is to be #1 in society redevelopment in Mumbai. And when this opens up in Delhi and other markets, we'll evaluate them very, very, dispassionately. But Mumbai redevelopment, society redevelopment, we are going to be #1. We already have had almost 8 to 10 wins so far against stiff competition. We have a strong team, and we are going to play a big role in society redevelopment.
A big role, and at least you've given us a very clear number as far as your aspiration for the Mumbai market in the redevelopment space is concerned. But I'm hoping that unlike your peers, you're going to leave me with a number on what you believe you're going to be able to do over the next few years in sales.
Yeah, so we have publicly now announced that we are targeting in this decade 14x. But if I have the support from capital, we can do more.
How much capital do you need?
This is like, every time I would go for a meeting to Anish, I was reminded of Subhash Chandra Bose. तुम मुझे खून दो, मैं तुम्हें आज़ादी दूंगा. So I was like, तुम मुझे capital दो, मैं तुम्हें return दूंगा, right? So that's.
How much money do you need?
So I have clearly outlined a plan for 4,000 to 6,000 crore. Keeping in mind what Amar said, that this is a business. One mistake can actually destroy significant value. So we have to be very, very clear about how we keep our balance sheet healthy, what kind of projects we sign, and that's something that we are going to be very, very diligent. We want to track each of our projects from an IRR perspective, and we do great projects which will give us financial returns.
He made a pretty good pitch, Amar. You're not signing off on the 4,000, 6,000 crores that he's asking you for.
The rights issue is a reiteration of the faith we have in that business. And I must mention, in terms of what we spoke about, the discipline that we're trying to drive around what is committed to what is delivered, the Lifespaces business has been an embodiment of that discipline. So that's why they got the rights issue, and there'll be more to go.
He's clearly Oliver Twist. He's asking you for more. But
you did say Anish.
But Suman, what's the headline that you're chasing after?
See, fundamentally for us, we need to ensure that this category, three-wheelers and small commercial vehicle four-wheelers, they electrify fast.
Yeah.
So that is our primary goal, to electrify the last mile of India. And while doing so, retain the #1 position in that. Today, we hold about 39-40% market share in the retails. And we would like to hold that as we continue forward.
And what has been the biggest challenge as far as making that transition is concerned? And what do you see as the key risk in being able to deliver on the number that you're working with?
Yeah. So the biggest challenge has been in many of the markets of India where there is adequate parking. The charging problems get resolved on their own. But in some markets where the customers do not have a house to live in, they don't have a parking, charging or a parking slot, that's where the key challenge is. And we are working with a lot of the states and the municipalities to try to outline where we can provide the charging points to make this transition seamless. Because otherwise, from a cost of ownership perspective or elevating livelihood perspective, this is a fantastic category and product for them. So that's sort of the one. And the risks, I would say, at this point, I only think that the number of players, the large number of customers, and the 30% electrification that is already there, we just need to sustain the momentum, and the 50% will be a definite possibility.
We've spoken about the headroom for growth and the opportunities, and I want to address the issue of risks as well, and from each of your vantage points. And Rao, let me address that with you. I mean, regulatory risk is perhaps one of the key risks as far as your sector is concerned. Do you see that is relatively benign at this point in time, given the fact that we've gone through a fairly volatile back and forth in the last few years? And more importantly, what would you see as being the big challenges that you have to face?
Yeah, thanks, Shereen. And lending is all about balancing between growth margins and risk. I think if you look at the regulatory arbitrage between banks and NBFCs for the last 5 years, that's really gone away. So the expectation from the regulator for at least the top tier NBFCs has been quite high, which meant that our practices got elevated to a bank-like status for the last 4 odd years. What that does from a resilience standpoint is it makes us kind of employ practices which will, for cyclical businesses, keep us in a good stead even when, let's say, there are credit cycles. I mean, liquidity was a constraint. Even the risk weights, that has, kind of been again addressed. So on balance, I think NBFCs were earlier a little bit more shaky when cycles were down. With what the regulator has done in terms of inherent practices and what a lot of us have done just to be much more resilient and swap in bank-like practices, control functions, very much like a bank. If you look at, the risk function, which looks at operating risk, credit risk, market risk, if you look at some of the compliance functions, all of that has really helped us understand that even in a down cycle, we will be much better off.
Okay. Mohit, one of the big risks, not just for you in specific, but for the industry in general, and that once again, existential question is being asked of the Indian IT services sector. What will AI do to the business model for the Indian IT services sector? How do you address that? More importantly, what are the capabilities that you believe you will need to bolster in order to make this shift and this transition?
Sure. So look, Shereen, if you look at it, every single technology transformation over time has been initially a headwind, but in the long term, a huge tailwind for the industry. And I almost see that we're seeing that transition again. From 18 months ago, AI will kill the IT services business, to 6 months ago, okay, maybe it won't kill it, but it'll clearly impair growth, to now maybe AI will actually be a huge tailwind for the industry. So we've seen that transition for every single industry technology cycle, right? Whether it was cloud or before that it was digital. And so I have no doubt that the narrative again is moving in the right direction, which is AI will be a huge tailwind for the industry. At the end of the day, our clients have very complex technology estates, right? They're hugely fragmented. So starting off with data, with applications, with infrastructure, they need to be simplified, they need to be modernized by people who understand networks very well, by people who understand, let's say, industrial and process manufacturing or insurance, underwriting, claims. So I have no doubt that it will be a huge tailwind for us at TechM. From a capability perspective, I think the first thing we need to do is obviously make sure that we're building out the platforms that allow us to use this technology effectively. We already, the first global SI to build a large language model from scratch. We're now doubling down on building a trillion parameter model now. We've also built out, a very significant platform with NVIDIA called TechM Orion in the agentic AI space. We're building ecosystem partnerships. We're building industry use cases. And now I think very excitingly, we're building a new model that allows us to price for human labor plus token consumption. So a completely transparent model, depending on the kind of project you're doing, data migration, application modernization, infrastructure. What is the combination of human labor plus technology tokens we will use? And I feel it will be, it'll be transformational for the industry.
Speaking of that transformation, Abanti and Asha, let me get you in on this as well. We're talking about making all of these strides and as far as accelerating growth across these businesses, but going back to the initial opening comment about purpose, how all of this ties up with the Mahindra Group's purpose, what it means in terms of your people, not just internally, but also externally, what it also means as far as the efforts on being sustainable as well. Abanti, I'll start with you.
Yeah, thank you. Pleasure to be here, Shereen. So I want to actually start with reiterating what Anish said at the outset, which is really that we stand on the shoulder of giants in the Mahindra Group who came before us. Because this is a group which had purpose in its DNA as it started out more than 75 years ago, and several industry firsts to its credit in the area of sustainability, long before sustainability and ESG became the buzzword today. So where we are today is we have a very clear strategy. Just as all the businesses have a strategy, we have a very clearly laid out planet positive strategy at the group level. And what is exciting is that each of the businesses, all the business leaders sitting around and many outside, actually own the strategy along with their teams and are driving it. And many are building purpose-led businesses. So I'll just look at Suman and Avinash here as two businesses which are very purpose-led. And so are the others. And the CEOs around this table actually spend a lot of personal time kind of integrating business strategy and sustainability. And so that has got us to a great place in terms of accolades. We have several global firsts amongst Indian but even global companies. So I'll just give a couple of examples. Dow Jones Sustainability World Index, where both the folks on either side of me, Rajesh with auto and Mohit with tech, are part of the Dow Jones World Index, and several others which are to our credit. So I think purpose, therefore, comes through to life through what we are doing in sustainability and is very well embedded within the businesses.
Asha, you want to add to that?
Thanks, Shereen. I just want to start by saying that last month, exactly 80 years ago, we released a print ad in the Times of India. I know this is CNBC, but,
yes,
but it's a print ad. But yes, that ad actually spoke about values. It did not speak about products or services. And the point I want to make is that these values are actually in existence across all businesses even today. So when you look at ethics, when you look at dignity of individuals, when you look about excellent business practices, Amar spoke about governance, those values are all there in the companies, in all our leaders, and that's what we bring to our work every day. The second point I want to make is that these values actually are the short form or become the bedrock of RISE. And when we think of RISE, we don't think of it as just a purpose statement, but it's really in the actions. And there are two actions that we are really proud of. And as Avanti said, that this is not something that we started in the last 4 years. But one of the initiatives that we feel very deeply touched about is Nanni Kali.
Yeah.
The efforts that have been done for the education of the girl child. And when you look at these girls, this is not just about education. This is about actually teaching girls that they really matter, that their lives matter. And the transformation that happens in their lives is nothing but purpose. I want to say that 50% of the donors who come to Nanni Kali are non-Mahindra companies. That itself goes to show that it's a really well-governed program, which means that every penny actually goes towards the girl child's education. The second bit, if I may add, thanks for indulging me, is about women empowerment. And we have a program that we call Kabil. And sometimes we think about women empowerment from the lens of charity.
Yeah.
But this is from the lens of actually making them economically empowered so that they get jobs. We have actually provided 1 million jobs to these women by partnering with more than 2,000 institutions, colleges across the country. And our ambition is to actually empower 1 million women every year from 2027 onwards.
Well, I have to say that I'm all in on that plan. So
Thank you,
I hope that you do make it happen. But, Anisha, 14 companies that we're speaking to today, is there enough on your plate? Or like insurance, is there anything new that you intend to move into at this point in time?
We did mention to investors that we would look at one new area in the next 12 months with a very high bar. We had exactly the same slide that we put up a year ago. And at that point, we had said insurance is one area we would look at. We have gotten into insurance in a space where we feel we can create very meaningful value for our shareholders. And similarly, if we find a space we can create meaningful value, we will look at it. We do play in 70% of India's GDP growth over the next decade. And therefore, our current businesses have huge room to go. And you're seeing that room to grow with holidays. You're seeing that room to grow with many of our other businesses. We've also talked about organic growth. Organically, we've grown 25% a year for the last 5 years across the group, despite being in some tough industries as well. And we plan to grow 15 to 40% organically for the next 5 years across businesses.
So is there anything at this point in time that you are remotely excited about, that you feel that you could look at getting into at any point in time?
We have a long list of things that we are looking at.
Have you shortlisted anything? Is there a top 3?
There is no top 3 at this point. When there is, we shall have that conversation.
Okay, we shall have that conversation. As I said, one of the new kids on the block, Avinash, thanks very much for joining us as well. The aspiration and the plan as far as Susten is concerned, more importantly, what you've already been able to clock in terms of deliverables.
So thank you, Shereen. I think from our perspective, we focused on being a quality player and then use the quality mantra to scale up over time. Because if you get your quality wrong, then you erode value over time, and therefore scaling up is going to be that much more challenging, and seeking capital from Amar is going to be that much more challenging. And therefore, we are focusing on building very high quality renewable energy assets. We are focusing on putting together a capital light structure, very efficient structure, where we're focusing on building assets with the amount of capital that we've got, asset manage them really well, optimize their performance, transfer them into a vehicle like an InvIT at an accretive value, and then recycle capital that allows you to offload debt and then reroute capital into your fresh development initiatives. And in that entire journey, we have also partnered with a very marquee investor who's come in, looked at our processes, practices. It's a very large Canadian pension fund who've partnered us across 3 business verticals. Our development arm, which brings in very deep execution experience, Mahindra Susten. We have an asset management arm, Mahindra Teco, that helps us operate our assets. Incidentally, they are India's largest, world's 6th largest O&M company. And of course, one of the larger advisors to third-party clients outside of Susten as well. And we've seeded an InvIT, with our Canadian pension partner, who's also co-sponsors, who help us accretively recycle capital, of course, subject to regulatory approvals. Put all of this in place, I think we are very well positioned to scale up our renewable energy business over time, and also contribute in a very meaningful way to the Prime Minister's aspiration of building 500 gigawatts of renewables for the country.
You know, Amar, what I'm picking up here from everybody, I mean, you're the harder customer to deal with, right? Or the hardest customer to deal with as far as these CEOs are concerned.
I'm learning from the best.
Well,
I'd say that's a good thing.
It certainly is a good thing, and perhaps also learnings from the past that you're putting in place. I mean, which is why they're having to really sort of hard sell their businesses to each one of you.
I started the Investor Day today by a token of gratitude to our leaders from the past who really built a very strong foundation, and reminded everyone that M&M has been the best performing stock in the Nifty from 2002 till 2018, and has regained that spot as being the best performing stock for the last 23 years now. But that doesn't happen easily. And the investments that our leaders have made at that point in time have enabled us to be who we are today. So we clearly owe them a huge token of gratitude. Yes, there are some lessons from the past, and the basic lesson is we have to drive profitable growth. We have to play in areas where we can scale up. What we tell our teams, think big, do less, and execute flawlessly. And that's essentially what we're following here. The real estate business has shown a tremendous amount of focus on profitability. And that is what we were looking for. As they've done that, we've opened the coffers to say you will get more capital. And there's more capital coming from the outside. There are multiple folks who effectively wanted to partner with us. They are eager to give us more capital. We've held them at bay for a while to say, we need to be convinced the business is profitable. The business has shown that. We're now opening the doors for that. So there are many pools of capital available.
So where do you see the external capital coming into soonest?
I would say real estate first. There are multiple conversations underway where folks want to come into specific projects.
Private equity,
there have been huge wins. It's a set of folks who are looking at long-term, who are pure equity partners, and who like the story that Mahindra Lifespaces has today, because it's very well positioned from a brand standpoint. And Mahindra, for example, is a 37-acre plot of land in Mumbai. There is another 35 to 40-acre plot of land in Thane. There's a 120-acre plot of land we're looking at. There are other smaller, what we call world cities that we're looking at. So there's a lot of excitement in Lifespaces. Key is maintaining profitability and delivering what we commit. As long as we do that, there's plenty of capital available.
So would it be fair or an unfair question to ask you, are there favorites here on the table for you? on the back of the potential that you see?
We have done the pruning where we exited 15 businesses. So at this point, each one of them is a favorite. So let me quickly go around the room, and Rajesh, I'll start by asking you vision for 2026 and the vision over the next 5 years. What do you hope to complete?
We can't call 2026 a vision. It's
Well,
almost a
it's
budget. So yeah, Shereen, we don't put out guidance, but we have this time to say that our businesses are going to grow multiple times in this decade, and we are very, very positive and optimistic on every business that we are in. The SUVs is doing very well, and there's a lot of upside. The LCVs as well. And tractors, we put out some specific industry numbers, and we stay very positive about the next,
I like the
next 5 years.
Industry-specific numbers.
Well, we're not going to lose market share, so we'll grow at least that much.
You'll grow at least that much. Mohit, I know, try and manifest a little bit before we say goodbye to you.
I'm going to put up the vision board. Look, I think, we put out a very clear plan for FY27, right? At the time we put it out, candidly, most analysts didn't fully price for it because they said, look, this looks really, really difficult in terms of margins, in terms of growth. But over 6 quarters, we have demonstrated resilience and performance towards the goal. So if you think of it, as a plane, we were taxiing, now the wheels have left the ground, and beyond FY27 is the time to go supersonic.
Go supersonic. You're going straight from taking off to going supersonic, and perhaps that's the best segue to come to you, Vinod. How quickly do you believe you can go supersonic with your business?
So, Shereen, as Anish said, we are sitting on a huge order book right now, which we have won in last 1.5 years. And the priority for F26 is very clearly to industrialize those packages, which in this industry takes a couple of years. And once we industrialize, then the revenue starts kicking in. And the most important thing which we are right now doing, which we are actually paranoid about, is that we are on one hand, we are delivering the orders which we already have executed. On second hand, we are doing industrialization. And we have to do both very, very well without losing the reputation we have built. And that's clearly is our priority for 26.
That's the priority. Manoj, of course, Signature Resorts, I would imagine, is going to be the key priority as well as the key ambition.
Yeah, so of course we are in a growth market. So I think Signature Resorts is one new foray which we have articulated. But really, I think scaling the core to 10,000 keys, I think that remains a big priority too. And as we think about it, I think whatever we have put as a decadal vision, it really translates to double the keys, double the revenues, and triple the profits from here on in the next 5 years. So I think that's the way we think about it, that we really have to focus on both of these. And of course, Signature Resorts is the new initiative. So obviously it will take a lot of time and attention, but scaling the core remains important too.
Nal?
F26, I have a must-do target. Rajesh said he. So we have to do mid to high teens growth in our SUV portfolio and high single digits and not lose share in the LCV portfolio. But over the 10-year period, we have a 8x target in terms of revenue top line for the auto business.
8x target. Amit?
So we have F27. We are pre-sales 4,500 to 5,000 crore. We are at 2,800 crore, so significant jump. For F30, 10,000 crore sales, which we'll try to accelerate sooner, which will be over a period of decade, will be 14x from where we were in F20.
Vijay?
Well, I think the focus will be on 4 growth vectors. Create a fortress around a domestic business, scale up international, scale up farm machinery, pioneer technology. Do all of this to deliver a 3x growth in revenue and meet our aspiration of impacting farmers' lives globally by pioneering technology. And do this through think big, do less, and execute flawlessly.
Suman?
Over the last 3 years, we have delivered 5x EV volume growth and put 300,000 EVs on the market. Our aspiration is to close the decade with 1 million EVs on the market. Okay. So that's across all the categories.
Across all the categories, 1 million of EVs on the road. That is the aspiration and the target as far as you're concerned. Avinash?
I think it's execute well on the projects that we've already won. Focus on winning new bids, especially more complex ones that are able to deliver peak power using batteries. And then ensure that the projects that we have built focus rigorously on quality and then recycle capital so that they can go back into new projects.
Rahul?
I'll draw from Anish's slide today where he positioned TechM and Mahindra Finance under unlock full potential. So clearly there's a pivot to growth. I think that growth will be on a couple of pillars. Number one is defend our vehicle business. Number two is grow our fee-based income. And number three is build adjacencies in mortgages and SME.
Okay. Amar, which is going to be the most crucial metric that you're going to be watching closely and chasing after over the next 5 years?
I think for us, the growth momentum is there. I don't think that's going to be, I think Anish already laid out a 15 to 40% growth metric across all our businesses. So the growth metric is there. I think the profitability and the ROE must stay to what has been committed externally, the 15 to 20% growth in EPS and the 18% ROE commitment that we have made, because that's the discipline that will make. For me, the big thing going into the 30s is going to be, there are a lot of Indians who are admired for being CEOs of big global brands. We want Mahindra to be the Indian brand that's admired globally. Right? And I think that will all come from all of this that you've just heard today.
Well, Anish, the pressure is clearly on you.
The beauty here is the leaders we have here are absolutely incredible. And therefore, that makes it much easier. We are building on a very strong foundation. And we've done well over the last 5 years. As we look ahead, to summarize what some of the leaders have said, we presented to our investors our growth over this decade from 2020 to 2030. We are halfway through that. For this decade, SUVs 8x in revenue, LCVs 8x in revenue, ILCVs 6x in revenue, electric three-wheelers 6x in revenue, Mahindra Finance 5x in assets under management, Susten 5x in installed capacity, Aerostructures 12x in revenue, Lifespaces 14x in pre-sales. We're thinking of growth in multiples, not in percentages. And profit growth will be higher than revenue growth, and market cap hopefully will be higher than that.
Well, as they say, success is on the back of strategic decisions and strategic choices that leaders make. And each one of these leaders here has articulated very clearly what they're chasing after, but more importantly, what they don't intend to go after as well. Thank you very much to each one of you for joining us here today, for giving our viewers and, of course, investors a very clear indication of the road ahead, the map ahead as far as the Mahindra Group is concerned. We wish you all the very best of luck as you fulfill the promises that you've made here to Amar, more importantly, and to Dr. Anish Shah. But thank you again for joining us. With that, it is time for us to wrap up this edition of On the Record with me, Shereen Bhan, from here, from the CNBC TV18 team. Thanks very much for watching. The news will continue right after this break.